Hi, this is Kerry Artak with Wicked Stocks, bringing you the weekly IWM report. That is the Russell 2000 ETF, the small cap index, for the week of Monday, August 15th, 2022. Just so you know, I did record this on Monday after Monday's close, so this will go out Tuesday morning, August 16th. Let's take a look at the charts. If you watched last week's IWM, you know that we were approaching a critical band of resistance between 186.66 and 193.29. We clearly settled last week above it. By the way, this is a weekly bar chart. All the charts I'm showing are weekly charts. So we have not fallen back to 193.29 this week. Monday we did not. The low was 198.22, and we even closed above Friday's high settlement. So this market continues an updraft. And in fact, what I really want to say about this chart, and as I had mentioned, last week before we settled above the 193.29 formation, that were we to close above 193.29, that likely marks a good low through the rest of the year, and that we should continue making steady gains back to that 244.46 all-time high. I believe that was in November. Don't quote me. Might have been December. In any event, it was late last year that we put out that all-time high, and I think over the next 3 to 5 months, we are likely to claw our way all the way back up to it. This based on the buy signal above the channel structure that is presently at 193.29. So downward retracements this week to 193.29 can be considered good buy zones, a solid support area that can absorb selling. Well, the truth is, not only for the week, not only through September, but perhaps through the rest of the year. Now, our next upside objective that may well be reached this week is 209.26. That is a descending two-thirds speed line that can absorb weekly buying pressures, and we can fall off from there back to 193.29 within a week or two. I'll have you know that the S&P 500 or the SPY actually settled above its two-thirds speed line on Monday for the first time. And so it's ahead of the game here in terms of setting off buy signals that are expected to play out into later year. The 209.26 speed line, if tested this week, nonetheless able to contain weekly buying pressures. And from there, as I said, we could fall back to 193.29 or that descending channel top within a week or two of doing so. We could trade inside that gradually widening wedge, if you will, between 193.29 and 209.26 for a number of weeks. But ultimately, which is likelier to give way is 209.26 to the upside. And if we do close above 209.26, then rather than 3 to 5 months, we're probably 2 to 3 months away from reaching 244.46, which is considered an objective expected to be realized by the end of the year above 193.29. If we do close the week above 209.26, our next quick 2 to 3 week target is 225.14. This former channel bottom able to contain, I'm going to say at least weekly, quite possibly monthly buying pressures. In fact, I think this will be a real trouble spot for the market because we're pushing into that congestive zone that played out for the better part of a year if you go back into this chart, back to January really of 21. And so I think this is actually pushing through that base a bit, but there's a lot going on in the 220s. 225.14, a former channel bottom, that if tested, and once again, it becomes a 2 to 3 week target if we close this week above 209.26. I'm going to say that by the end of October or sooner, we should reach 225.14 so long as we continue trading above 193.29. And once again, the accelerator on that would be a settlement at the end of this week above that 209.26 speed line. Now, of course, if we were to close above 225.14 over the next couple of months, then we're probably just 3 to 5 weeks away from reaching the 244.46 3 to 5 month target right now above 193.29. Now, on an intra-week basis, if Wednesday or Thursday we happen to violate, close below 193.29, we could, by Friday's close, actually test 186.66, which is a meaningful band of support in and of itself. But if we do close the week back below 193.29, failed longer-term buy signal. In essence, a valid sign of weakness as we continue into September. And I think over the following, possibly within 3 to 5 weeks, no more than 2 months, probably by the end of September, if we close this week Friday back below 193.29, That is considered a failed long-term buy signal. In essence, a valid sign of near to mid-term weakness, whereby I would anticipate by the end of September the market to fall back into the significant 160s long-term support. The 168.49 is a rising two-thirds speed line projected off the March 2020 low, and 164.16 is a long-term Fibonacci. You can see it better on this chart. There's your 164.16. That's a 3/8 pullback on that significant 2009 financial crisis low against the B, which is the all-time high that was put out in November or December. I'm sorry, I forget. I don't have the chart in front of me. I'm looking at the images as I speak. So 164.16 is the beginning of a base of support up to 168.49, that rising two-thirds speed line projected off the March 2020 low. This area, if tested over the next month or two, can still contain selling through the rest of the year. And from there, we could consolidate and turn higher again. I'll have you know that 168.49 rising two-thirds speed line also held in the triple Q, and beautifully, in fact. So I do the daily triple Q report, the daily SPY report. If you're wanting S&P 500 analysis, we do weekly S&P 500 index, weekly NASDAQ 100 index. You can get all that on wickedstocks.com as part of our paid premium packages. Very reasonably priced for what you get every single day. Once again, I think I'll kind of leave it here. We are above 193.29, anticipating 244.46 by the end of the year. But if we close the week below 193.29, this market is susceptible, and I want to say likely, to fall back by the end of September to long-term support in the 168.49 level, which is backed up by 164.16, 3/8 Fibonacci. And upside this week, 209.26 is in reach above 193.29, able to contain weekly buying pressures. We may fall off from there, but if we close above it, we're only 2 to 3 months away from reaching 244.46. That is all I've got for this week's IWM report. Thanks for watching. Please click like, please click subscribe, and please visit wickedstocks.com. Check out our premium section. There's a lot going on. 2 stock picks a week you never see on YouTube. Weekly S&P, weekly NASDAQ, daily SPY, daily Q, and a weekly ETF that's based on U.S. Treasury analysis, typically the TLT. Thanks for watching. Have a great day. We'll talk soon.